Time for the 360 round, all about electric vehicles, because we've had some reports, some are due to report, and Tesla's always in the news.
There, Tesla's got to convince the market that they're more than a car company, they're a technology company. And to do that, they're going to have to come up with some pretty striking news on October 10th when they bring out the next version of full self-driving. I think they can do it. We'll see. The big challenge there is Waymo already has regulatory approvals in San Francisco, Los Angeles, Phoenix. They already have full self-driving cars on the road. The regulators have approved. Tesla's got to get over that hurdle. We'll see. What they might do is announce they have regulatory approval in China and they're starting there, the world's largest auto market. That might be a bump for the stock, but they've got to produce, and I've got my fingers crossed.
Now for the 360-degree spin, focused only on electric cars. Reports have been flooding in, some of which are scheduled for release, and Tesla is, of course, never out of the news. Convincing the market that Tesla is a technology company rather than merely an automaker is a challenge for the company. And in order to accomplish that requires some startling news when they unveil the most recent iteration of full self-driving, FSD, on October 10. We'll see, but I think they can pull it off. The main obstacle. In fact, Waymo already possesses regulatory permissions in Los Angeles, Phoenix, and San Francisco. Fully autonomous vehicles are currently in use on public roads. The all-clear has been given by regulators. Tesla must overcome that obstacle. However, they might declare regulatory approval in China, the largest vehicle market in the world, which would be extremely beneficial to the stock. They have to deliver, and I'm crossing my fingers. Rivian and Lucid are having a difficult time navigating the waters as Tesla continues to shine with its groundbreaking technologies and skyrocketing stock prices. This episode will explore the difficulties these businesses are facing, the survival tactics they are using, and how Tesla continues to play a significant role in the ever-changing EV market. We will present a thorough examination of Lucid's sharp reductions in production projections and Rivian's difficulties with profitability in spite of their lofty models. We'll also look at how Tesla could extend its advantage in the market thanks to its research into humanoid robots and autonomy breakthroughs. So fasten your seatbelts as we analyze these developments and speculate about their implications for the future of electric vehicles. This episode has something for everyone interested in this risky business, be it an investor, a tech enthusiast, or just someone who is simply curious. To ensure you never miss out on our in-depth updates and analysis here at Tesla Stock News *, make sure you're subscribed and that your alerts are on. Now, let's get started. First off, Tesla is setting the standard for electric vehicle leadership and success in the industry. Conversely, there is Lucid Motors. Every 3 months, they spend almost $1 billion, a substantial sum of money that is squandered. They're working really hard to keep the lights on. On to Rivian, where things don't seem very promising either. They are in a precarious situation, depending on Volkswagen to provide them with a substantial sum of money. With certain well-known supporters, Rivian still has a chance to survive despite these difficult times. But to be honest, it's kind of like having a younger brother who is constantly begging for money. Volkswagen has backed Rivian, but that doesn't provide Rivian a lot of advantages. Since they're not truly in charge anymore, they may have to make some difficult concessions. They have a poor financial outlook, and it will be difficult to compete with a company the size of Tesla. In stark contrast to Tesla's present dominance in the EV market, Rivian and Lucid are facing serious obstacles and are truly in the trenches. Let's examine the problems they are having and consider how these advancements could help Tesla. Lucid Motors finds itself in a difficult situation, even with significant support from Saudi investors. They are losing almost $2.5 billion a year. Just 2,400 automobiles were produced in Q2, therefore the profitability calculation is impossible. In order to reverse the situation, Lucid must drastically increase production rates. However, scaling up requires time, resources, and reliable operational procedures, all of which Lucid is obviously having trouble with. It also does not happen overnight. Furthermore, when Lucid was forced to significantly lower their vehicle delivery projections, their reputation suffered. They used to have a grand target of 90,000 cars by 2024, but it has since been lowered to only 9,000. This drastic change raises concerns about their ability to accomplish goals and may cause investor confidence to waver, raising more questions about their long-term viability. Now let's shift our focus to Rivian, who is facing a unique set of difficulties, chief among them being exorbitant production expenses. Their resources are strained since it costs a lot more to construct each Rivian vehicle than anticipated. The recent approval of a multi-billion-dollar merger with Volkswagen may provide much-needed finance and experience to their operations, so there is a bright side. This acquisition may be just what Rivian needs to streamline operations and cut expenses. How does Tesla now profit from all of this unrest? In addition to effectively scaling up manufacturing, Tesla is still innovating in cost containment and product development. Due to Rivian and Lucid's difficulties, Tesla is able to solidify its position as the market leader with less immediate competitor pressure. Potential and current customers may view Tesla as a more dependable option than Rivian, which is struggling with high prices, or Lucid, which is reducing predictions. Due to its well-established track record of reaching production targets and producing high-quality cars, Tesla may draw in additional investors and clients. Better terms with suppliers and more advantageous market conditions may follow from this. Additionally, Tesla can benefit from its rivals' mistakes by securing better terms or luring personnel away from faltering businesses. It's looking like Rivian has a long way to go in the EV business, especially when compared to Tesla. Following over 10 years of development and improvement, Tesla has raised the bar. Since Rivian is still in its infancy, it is difficult for it to produce cars at the same rate as Tesla because doing so requires efficiency. Furthermore, Tesla is still developing new production technology. Rivian must therefore not only catch up, but also innovate alongside a behemoth that is constantly shifting the objectives. Let's now turn our attention to Tesla's more ambitious goals. Although their supremacy in the EV industry is well established, everyone's attention is being drawn to their progressive initiatives. Tesla is not content to just make electric cars. They're going after autonomy head-on and are even going so far as to make robots that resemble humans. This might completely change the way we use technology on a daily basis. It's more than just an extension of their product range. Regarding possible purchases, curiosity is sparked by Rivian and Lucid's problems. Should they be unable to stabilize, businesses seeking to increase their presence in the EV market may find them to be appealing targets. The difficulties these entrants experience may create opportunity for Tesla. Tesla is becoming more and more of a tech powerhouse, as seen by its developments in autonomous technology and its research into humanoid robotics. Tesla's ongoing innovation has the potential to further exacerbate the gap between Lucid and Rivian as they traverse rough waters. And lastly, the Cybertruck is still a big deal. Because it's not simply another model, but one that introduces revolutionary technology like steer-by-wire and a higher voltage system, its gradual ramp-up was to be expected. These are fundamental changes, not merely small improvements. The truck's attributes have been highlighted in viral videos, and celebrity endorsements from people like Donald Trump and Tucker Carlson have increased the vehicle's appeal. It is also impossible to ignore Tesla's enormous production capacity. With a fleet of over 7 million vehicles by the end of this year, they're on course to further solidify their supremacy in the industry thanks to their Fremont plant, which is breaking records in manufacturing at an amazing rate. In conclusion, Rivian and Lucid are dealing with serious issues, including production problems and unstable finances. As everything is going on, Tesla is thriving and leading the way in innovative technology, not just staying competitive, but also establishing the standard. There is no greater contrast than this. As Rivian and Lucid look for ways to survive, Tesla is forging ahead and establishing itself as a leader in the field. What do you believe will happen to Rivian and Lucid next? Is Tesla too far ahead, or can they turn things around? And how will the development of autonomous and humanoid robots by Tesla impact not just transportation, but also our day-to-day existence? Post your ideas in the comments section below. Please remember to hit the like button, subscribe to Tesla Stock News and ring the bell to receive updates on our newest videos if you liked this update and want to stay up to speed on Tesla and the wider EV sector. Hold on to your energy and prepare ready for even more riveting news. I appreciate you seeing. Although it is still the same length, this version has improved grammar and flow to make it easier to read and more clear.